All right, welcome everyone. We've put together this discussion with the experts at Pro Tax Accountant. And today, we are diving into a really important topic, non-resident income tax relief here in the UK. You know, if you're living abroad but still have some money coming in from the UK, this could be a huge deal for you. We're talking about potentially saving a lot of cash, so let's get right into it.
So let me ask you a quick question. Are you living abroad right now, but you've still got income coming in from the UK? Maybe you've got a rental property back home, or a UK pension paying out, or maybe you did some freelance work here. If any of that sounds familiar, you're going to want to pay close attention.
Because here's the thing, there's a really good chance you might be paying way more tax to HMRC than you actually need to. And nobody wants to do that, right? The UK tax system, well, it can be a bit of a maze, especially for non-residents. But if you get a handle on the rules, you can genuinely save a ton of money. And that's exactly what we're here to do today. We're going to help you fix that.
So here's our game plan. First, we'll figure out if you're even classed as a non-resident. Then we'll pinpoint what UK income is actually taxed. After that, we'll get into the good stuff, qualifying for tax relief and understanding those super important double taxation agreements. Then I'll walk you through how to claim, and we'll finish up with some key dates you absolutely cannot miss.
Okay, first things first. Am I a non-resident? This isn't just a simple question, honestly. It is the absolute foundation for your entire UK tax situation. Getting this right from the get-go is the most crucial step.
So to work this out, HMRC has an official test. It's called the Statutory Residence Test, or SRT for short. Now, it's not just about counting how many days you're in the UK. The SRT also looks at your connections to the country, what they call ties. We're talking about things like having family here, a place to stay, or if you do a significant amount of work in the UK. Okay, so the SRT tries to make it simple with a couple of automatic tests. It's kind of like a quick checklist. On one side, you're automatically a non-resident for tax if you spend like fewer than 16 days in the UK, or if you're working full-time overseas and spend under 91 days here. Pretty clear, right? Now, on the flip side, you're automatically a UK resident if you spend 183 days or more in the country, that's about half the year, or if your only home is here in the UK. What if you're somewhere in the middle? Well, that's when it gets a little more tricky, and HMRC brings out something called the Sufficient Ties Test.
Right, so let's say you've done the test and you've confirmed you are a non-resident. Perfect. Now let's look at the next step. What income does HMRC actually care about? It's all about pinpointing your exact tax obligations.
Generally speaking, as a non-resident, you really only have to pay UK tax on your UK income. So what does that include? Well, the common ones are things like rent you get from a property in the UK, payments from a UK pension, or wages for any work you physically come to the UK to do. Think about it like this. Say you're Maria, a freelancer living out in Spain, but you own and rent out a flat in London. That rental money? That's UK income, and it's taxable right here. And hey, here's a fantastic pro tip for anyone who owns property back in the UK. Listen up. It's called the Non-Resident Landlord Scheme, or NRL scheme. See, normally, your tenant or your letting agent is legally required to chop 20% off your rent for tax before it even hits your bank account. Ouch. But if you register for this scheme, you can get paid your rent in full with no deductions. Now, you still have to declare that income and pay your tax through a tax return, but it puts you back in control of your cash flow, which is a massive win.
Now we are getting to the really good part, how you can actually lower that tax bill. Stay with me here. This section is where you can save some real money. It's all about understanding what relief you're entitled to. Okay, the magic number you need to remember is £12,570. That is the UK's personal allowance for the 2025-26 tax year. Put simply, it's the amount of money you can earn from the UK before you have to pay a single penny of income tax. So, the big question is, can you, as a non-resident, get it?
The answer is yes, you can. But there are conditions. You're usually eligible for the personal allowance if you're a British citizen or a citizen of a country in the European Economic Area. You could also qualify if you live in a country that has a special clause in its tax treaty with the UK. We're talking places like Japan or Canada. And finally, if you've ever worked for the Crown, you're probably eligible too. So the key takeaway is that not every non-resident gets this tax-free allowance automatically.
And that leads us perfectly into our next topic, double taxation agreements. Now, I know that sounds like some heavy tax jargon, but trust me, this is your single most powerful tool for making sure you don't end up paying tax on the same income twice.
So what on earth is a DTA? Well, think of it like a referee in a football match between two different countries' tax departments. The DTA's job is to step in and decide which country gets to tax your income.
Its whole purpose is to stop you from being taxed in both the UK and in the country where you live on the exact same money.
And here's the really good news. These agreements are everywhere. The UK has these treaties with over 130 countries, which covers pretty much all the major economies you can think of. So whether you're living in the US, Australia, Spain, or India, there's a very, very high chance that an agreement is already in place to protect you.
But, and this is a big but, here's the catch. You can't just tick a box and assume you're covered. To actually use the DTA, you have to prove where you live for tax purposes. This means you need to get an official document, called a certificate of residence, from the tax authority in your country. That piece of paper is your golden ticket. It's non-negotiable.
Okay, we know what the relief is, we know why it's there, so now let's get into the practical side of things. How do you actually claim it? Let's walk through it step by step.
We can really break this down into 4 simple, manageable steps. Step 1, confirm you are a non-resident using that statutory residence test. Step 2, look up the double taxation agreement between the UK and your country to see exactly what you can claim. Step 3, get that all-important certificate of residence. And finally, step 4, you have to officially claim everything by filing a UK self-assessment tax return.
Now, here's a really important one. A real did-you-know moment that trips so many people up. As a non-resident, you can't just hop onto the regular HMRC website to do your tax return online like everyone else. It won't let you. Instead, you have 2 options. You either need to buy special commercial software that can handle the non-resident form, that's the SA-109, or you have to go old school and file by post. Seriously, this is a huge pitfall, so please remember this one.
We have covered a lot of ground, so let's wrap things up by focusing on the most important stuff, the key dates and the main points you really need to take away from all this. Take a close look at these dates because HMRC does not mess around with deadlines. For the 2025-26 tax year, if you're filing a paper return, which, as we just said, a lot of non-residents have to do, your deadline is the 31st of October 2026. Notice that's a full 3 months earlier than the online deadline, which is the 31st of January 2027. If you miss these, you're looking at automatic penalties, so get them in your calendar right now. And that leads us to our final and most important question. After everything we've talked about, the complex rules, the SRT, the tax treaties, the ever-changing allowances, are you 100% certain that you're getting it all right and claiming every single penny of relief that you are legally entitled to?
Look, if there is even a tiny bit of doubt in your mind, the smartest thing to do is to talk to a professional. For that peace of mind, that clarity and confidence, get in touch with the team at ProTax Accountant. You can reach him directly on WhatsApp or by phone at 07985 689 912. Or you can just send an email to info@protaxaccountant.co.uk. They live and breathe this stuff and will make sure you get it right.
I really hope you found this guide helpful. For more clear, easy-to-understand guides on UK tax, make sure you hit that subscribe button for the ProTax Accountant channel. Thanks so much for watching.